Banks have been quietly stealing from you for years. Today I am going to show you exactly where to move your money so they never can again. Because knowing the problem is only half the battle. The other half is knowing what to actually do about it. And that is what most finance videos skip entirely. They tell you what is wrong, but they never hand you the solution. Not today. Today you are walking away with a real, simple, actionable plan for where every single dollar you earn should actually be going. No complicated strategies, no expensive advisors, just the exact places your money needs to be right now. Let's get into it. Place number 1, your emergency fund. Before we talk about growing your money, we need to talk about protecting it first. Here is something most people skip, and it destroys them financially. If you do not have an emergency fund and your car breaks down, your phone dies, or you lose your job even for 1 month, you are forced to go into debt. Credit cards, loans, borrowing from family, and the moment you go into debt, you are back to working for the bank instead of for yourself. So, before anything else, you need 3 to 6 months of living expenses sitting somewhere safe and accessible. Not invested, not locked away, accessible. And the best place for your emergency fund right now is a high-yield savings account at an online bank. Here is why this matters more than most people realize. A regular savings account at a big traditional bank pays you around 0.01% interest per year. We talked about this last video, $1 a year on $10,000. But a high-yield savings account at an online bank right now is paying between 4 and 5% interest. On a $10,000 emergency fund, that is $450 a year, just sitting there, doing nothing, while still being fully accessible if you need it. Online banks can offer these rates because they have no physical branches to maintain, no rent, no tellers, no overhead. They pass those savings directly to you in the form of higher interest rates. And here is what most people worry about. Is it safe? Yes. Online banks in most countries carry the exact same government deposit insurance as any traditional big bank. Your money is just as protected, completely different result. A quick search for high-yield savings account in your country will show you the best current options. Look for the highest rate with government insurance protection and open one today. It takes about 10 minutes. That is step 1. Emergency fund in a high-yield savings account. Done. Now, this is where most people get scared, and I completely understand why. Investing sounds complicated. It sounds risky. It sounds like something only rich people with financial advisors do. But here is the truth that Wall Street does not want you to know. The simplest investment strategy in the world has beaten almost every professional fund manager over the last 30 years. It is called an index fund. Here is how it works in the simplest possible way. Instead of trying to pick individual winning stocks, which almost nobody does successfully long-term, you simply buy a tiny piece of every major company at once. When you invest in an index fund that tracks the largest companies in your country or the world, you are buying a small piece of hundreds of major companies in one single investment. When those companies grow, and historically over long periods they always have, your money grows with them. The largest stock market index in the world has averaged around 10% returns per year over the last 50 years. 10%. Compare that to your savings account at 0.01%. And you start to understand why the wealthy keep getting wealthier while everyone else stands still. Most major investment platforms in your country will offer index funds. Look for ones that track the total market or the largest 500 companies. The most important thing to look for is low fees, called expense ratios. The lower the fee, the more of your returns you actually keep. You can start with as little as $20 or $50. The amount does not matter nearly as much as the habit of starting, because the most powerful force in investing is not how much you invest. It is time. Every year you wait is compounding growth you can never get back. This one is one of the most powerful financial tools available, and most people either do not know it exists or think it is only for old people. Almost every country in the world offers some form of tax advantage retirement account. In the US, it is called a Roth IRA, or 401k. In the UK, it is called an ISA, or pension. In Canada, it is called a TFSA. The name changes by country, but the principle is always the same. The government gives you a special account where your money grows with significant tax advantages. Let me explain why this is extraordinary. Normally, when your investments grow, you pay taxes on those gains. But inside a tax-advantaged account, your money can grow completely tax-free or tax-deferred, depending on the type of account you choose. That difference over 30 years is not small. It is the difference between having $500,000 and having over $1 million from the exact same contributions. The only difference is where the account is held. The contribution limits vary by country, but most allow you to shelter several $1,000s per year from taxes inside these accounts. The strategy is simple. Open the tax-advantaged account available in your country. Put your index fund investments inside that account. Let time and compounding do the rest. A quick search for tax-advantaged investment account, plus your country name will show you exactly what is available to you. So here is the complete simple system. Every single payday, your money moves within 24 hours. First, a specific amount goes directly to your high-yield savings account until your emergency fund of 3 to 6 months of expenses is fully funded. Second, once your emergency fund is complete, that same amount shifts automatically to your tax-advantaged retirement account, invested in a low-fee index fund. Third, if you have money left over after maxing your retirement account, it goes into a regular investment account and gets invested in the same index funds. That is the entire system. High-yield savings account for protection. Tax-advantaged account for tax-free long-term growth. Index funds for everything else. No stock picking, no day trading. No financial advisor charging you 1% of everything you own every single year. Just 3 simple buckets that automatically build wealth while you sleep. Now I want to warn you about the single most common mistake people make after learning all of this. They learn the system, they feel motivated, and then they do nothing. Not because they are lazy, but because they get overwhelmed trying to find the perfect account or the perfect fund before they start. There is no perfect. There is only starting. An okay high-yield savings account open today is worth 10 times more than the perfect one you research for 6 months and never open. A basic index fund started with $50 today will outperform the perfect portfolio. You plan but never build. The financial system is built on your inertia. Banks profit from the gap between when you learn something and when you actually do it. Close that gap today. Pick one of these 3 steps and do it before you go to sleep tonight. Just one. The banks spent billions hoping you never learned what we covered in the last video. They are spending billions more hoping you never act on what we covered today. Every dollar you move to a high-yield savings account is a dollar they can no longer use to make themselves rich. Every dollar you put into an index fund inside a tax-advantaged account is a dollar building your future instead of sitting idle making theirs. You now know more about where to put your money than most people learn in a lifetime. The only question left is what you are going to do with it. Which of these 3 steps are you starting with? Drop it in the comments right now. I read every single one. And if this is starting to change how you think about money, subscribe. Because next video, I am going deep on the credit card trap. Not the basic advice you have already heard. The actual engineering behind how credit card companies design their products specifically to keep you in debt forever. It is going to change how you look at the card in your wallet. See you there.